In the last video, we went through my full portfolio structured in 3 sleeves: growth, income, and cash, and learned that each of the sleeves has its unique purpose. In this video, I want to deep dive into the growth sleeve with the purpose to grow capital over time. Before we go any further, I want to point out that I'm using so-called UCITS ETFs that are mainly geared towards European and also Singaporean investors due to the lower withholding tax benefits. If you're from another country, please ensure that you choose ETFs that are best suited for your country's legal framework and tax situation. With that out of the way, let's jump into the growth sleeve. My current growth setup holds 2 ETFs. VWRA, a full world ETF with thousands of companies worldwide utilizing 95% of the sleeve, and EIMI, an emerging markets ETF tilting the sleeve a little more towards emerging markets and reduces US exposure, which usually makes up around 60% in most full world ETFs. Both are accumulating ETFs, which means the dividends are automatically reinvested at fund level, which is very tax efficient and has a compounding effect. This is a perfectly valid and efficient growth sleeve setup with which I'm very happy. But due to external forces, I'll need to do some changes. Let me explain. When I was looking at the visas, one visa stood out: a wealthy pensioner visa in Thailand. The benefits, if I can reach the requirements of this visa, are that I would earn more income than I'll most likely need, and income brought into the country from overseas is tax exempt. But there are requirements. The first requirement is a $250,000 investment into Thai assets such as property, government bonds, or similar assets. The second requirement is visible income of around $40,000 a year. And this leads to an interesting problem, as my current growth sleeve alone can't produce this income. And VWRA and EIMI currently don't produce any income as dividends are reinvested. One option would be to sell a part of the growth ETF on a monthly basis, but depending on interpretation, this might not count as visible income. And selling growth ETFs during a stock market downturn can actually damage the portfolio. So the, in my view, better option is to move from the accumulating ETFs into distributing ETFs, so ETFs that pay out a dividend. Even then, I'm pretty borderline at target. If I could work 1 or 2 years longer, it would be easier to reach this target. Or I might need to live frugally for the first 1 or 2 years and put money aside to reach the goal with my current financials. But reaching this goal would put me more at ease and would let me retire pretty comfortably. So how does this change look like? My plan is to shift between 70 to 100% out of VWRA into VWRL and VHYL. VWRL is the distributing version of VWRA, which produces a yield of around 1.5%. VHYL is another full world growth ETF that invests into higher dividend-paying companies and produces a yield of around 2 to 2.5%. The other change I'll make is to move the money I currently have in EIMI into SEDY, which is also an emerging markets ETF that currently yields 5.5%. The next question is then when I'll initiate this change. I think I'll wait a little due to 2 reasons. The first reason is that I still have a job and I'm not reliant on that income yet. And the second reason is that the stock market is currently down due to the oil shock and Iran conflict. I don't think it would have that big of an impact, as the ETFs are pretty similar if I would change this now, but I think it's better to wait until the stock market has recovered a bit. It's important to note that I'm not changing the structure of the growth sleeve. VWRL and VHYL are both growth ETFs that will help to grow the portfolio and protect against inflation. The difference is that they, together with SEDY, now contribute to my visible income target of $40,000 a year. I hope this then makes immigration happy, which then makes me happy, and all can live happily ever after. Or so I hope. Based on my current visa adventures, I can tell you it's no walk in the park. And if I would still have hair, this is where the last would be lost. More on that to come in subsequent videos. The biggest takeaway of this video is that before you make any portfolio decisions, you might want to research the specific visa requirements of the country you want to retire in. It's another reminder that the lifestyle you want to live in retirement might have an impact on your portfolio. So, now that you know what I'm up to with my growth sleeve, in the next video we'll do a deep dive into my income sleeve. Have a great day and see you in the next one.